Hey everyone, it's Richard Payne here, and it is Halifax Real Estate Market Stats time. Because there has been so much change, we want to get into the detail and see exactly what's going on. So let's do that right now. So let's get straight into it because we want to see exactly how the month of May performed. So number one thing, of course, is always going to be the average sale price. And we are sitting at $644,824. Let's just call it $645,000. So that is the average price of all of the single family homes that actually sold in the month of May here in Halifax. And I gotta say, we are on the increase. If we look at last month, that was $633,000. We're up 2% on that number. So we're still increasing. If we go back to last year, that was $609,000. We are up 6% on that number. So, we've been looking all the time at is the housing market going to slow down? Are the prices going to come down? And when we look at the last 12 months, absolutely not. That is not the case. We are not seeing prices come down. Yes, we're not going up by if we go back 3 years ago to those crazy times, remember those? Well, we're not seeing them go up by as much as that. But if you look at 6% growth from last year to this year, that's pretty impressive given our really high interest rates right now. I mean, you're talking 4.89 for a 5-year fixed. Variables, a lot more than that. Can't remember the exact number, but it is a lot more. So when you look at the price growth we've had, we're actually doing really well, given that our average price now is basically $645,000. So we are really staying up there. Now, factors that you would look at that are contributing to that is definitely the fact that we've been undervalued for a long, long time. This to me seems like we've actually caught up with kind of where we should have always been from a real estate point of view, from a pricing. And also when you look at the demand, because we'll quickly jump into this one because we've only got 1.7 months of inventory in the market right now. So we are still in a very, very solid seller's market. So the buyers are finding it a little tough. We're back into multiple offers as well. We just listed a property in Sunset Ridge in Middle Sackville, kind of a really good average price point, $530,000. Definitely sitting in that first-time home buyers or the first-time trade-up market. And yeah, day one, 2 offers, both of them over asking price. Not huge over asking price, but it was smart enough that we said, okay, we'll take that one. And we actually carried on with it, and now we're conditional. So there is still a ton of demand up there. Now, price point wise, this is where it gets really interesting because the average price point at $645, that definitely is kind of that sweet spot. If you're in that $500,000 to $700,000 range, that's kind of like the average market, and that's where a lot of the people are sitting. So a lot of buyers are sitting in that kind of price point, wanting to get their property. Go underneath 500 and it's going to be a little bit of chaos. Absolutely, it's going to be bananas because there are hardly any houses in that price point in a good area. So there's the preface, in a good area. For buyers, that's what that means is the 3 things that always sell houses, we've said it all along, is the price, the condition, and the location. Well, if you're in a good condition and you've got a good price and you're in a good location, that is absolutely going to show up with the amount of offers and the number of activity you're going to get from a buyer's point of view. So it's just about positioning it right. We'll go into some of the properties as well, because when we get into average price points, there's definitely a shift in the higher markets. But surprisingly, this month there's been a lot of activity in the higher price points, like $900,000 and above, but depends on the location. So now when we get into some of the numbers, sale to list price, we're at 101.2%. So on average, 1.2% over asking price. Not in all markets, on average. So when you look at that, it means that the average list price was $638,000, but we're getting $645,000 from a sale point of view. So still pretty healthy. Last month, that was 1.1. Last year, that was 1.5. So again, that just stacks up that this year, there's not really that much change from last year. And the prices are holding, absolutely holding where they should be. Average days on market. This is an interesting one because last month that was 37. This month, we're down to 28 days on market. So we actually dropped 9 days off the average days, maybe 10 days, on the average days on market. And that's really one of the big shifts, is that things are starting to sell quicker. It's also May. So we had a delayed spring market, because spring is always usually a bump for us. And that tends to be like in the January, well, not January, more like February and March, maybe a little bit of April. But it seems that, again, we'll go into the number of listings this month. It seems that it shifted in terms of like how many listings came onto the market and when they came onto the market. So like I said, we're at 28 days on market, 37 last month, last year 24. So not a great change at the moment, apart from the price, when you look at last year compared to this year. Now let's get into the number of sales. 490 homes sold, only 407 last month, 510 last year. So again, we're only 20 houses behind the number of houses that were sold last year, which is just, again, it's adding to the story. It's very, very similar to last year so far. And especially, we'll ignore price because prices have gone up. But when you look at the average days on market, when you look at the amount of inventory, when you look at the number of houses sold, very, very similar. One of the other big things we like to look at, of course, is the number of active listings. We are at 833 houses for sale at the end of May right now. Last month, that was 714. So we're up 17% on the number of homes that are actually active for sale. 679 last year, so we're up 23% in terms of that number. So that's the big change this year compared to last year, is we have a lot more homes that are actually available for sale. So hence last year it was 1.3 months. This year we're at 1.7 months. Last month it was 1.8 months of inventory. So again, it all adds to the story. We have basically a lot more listings available for sale, and we also have a lot more houses that were sold. It's just last year we definitely had less homes actually up on the market for sale. One of the other big things I always like to do as well is we like to look at the sales to new listings. So this month, new listings to the market was 671. Last month, that was 602. Last year, that was 645. So you can kind of get the feeling that when we sell 490, we had brand new listings come to the market, 671. That's 73% sales to new listings. So again, we are definitely not at the stage where all of the new listings coming to the market are actually also being sold. Not the same properties, just the numbers. So we're actually putting more inventory on the market. And that's the same last month and the same last year. Last year it was 79% last year. So it didn't change that much. The only big change this year compared to last year is, number one, the price, but number two, the actual amount of homes that are active for sale. So it's a very similar month in terms of May this year versus May last year. So what does it mean for buyers? Well, let's start talking a little bit about that announcement that's going to come in a day or two's time, which is the next June the 5th mortgage rate change from the Bank of Canada, or the base lending rate. So the full expectation has been all along this first half of the year, we're expecting rates to go down. Hasn't happened at all this year so far. I don't think it's actually going to happen in June either. I think they're going to wait. Now, if they wait and delay it to the July announcement, there will be a reduction then. But when we look at inflation, we've gone from like 2.9 to 2.8, and now we're at 2.7. The government wants that number to be at 2. Well, we're still a good number away from that. So I think if they reduce the rates down this month, then unfortunately they're going to have to be looking towards the end of the year. Maybe the inflation number stalls at 2.7, and therefore they're going to have to actually bring the rates back up again. The government does not want to do that at all. So I think we're going to not have a rate announcement change. I think they're going to wait until a little later in the year, and then they're going to change it. And the other big thing as well is, for buyers, we know a lot of buyers are sitting on the sidelines waiting for a change in the fixed rate. The big thing is, any rate announcement change from the government, the Bank of Canada, does not affect the fixed rate anyway. It affects the variable rate. So if you went out today and said, okay, I'm going to wait for the fixed rates to change in like 3 days' time after the announcements are made, you're not going to see it. And therefore, there are an awful lot of buyers that are just sitting there waiting for some announcement to make them feel that there is some kind of a change, and then they're going to get off the fence. So From a buyer's point of view, we've been saying this all along, like it's one of those situations that you just need to get on with it. You need to get out there and start having a look at prices, because prices are not going down. If you'd have bought this time last year, the average was 609. Now we're at 645. So average prices are not changing. So some buyers are sitting there saying, I'm going to wait until the prices come down. That's a bad strategy. We're not seeing prices come down. If anything, we are starting to see the re-emergence of multiple offers, which will keep prices high. So if you're one of those buyers, if you're sitting there thinking you want rates to drop or you want prices to drop, you need to stop thinking like that, and you need to start thinking that you need to get into the market soon. Because if the prices do start staying where they are, but the rates come down, it's going to be a ton of competition and you're going to be sat in the middle of it. For sellers, what does all of this information mean? It means that you're in a fairly strong position, but I will always come back to those same three things: price, condition, and location. If you don't get the price right and you're in a good location and you're in a good condition, you have got to change that price. You've got to react to the market, because a lot of these houses are selling for 28 days on market and they're not sitting around that much, and you're just going to get washed over. So please make sure that you are definitely listening to your realtor, taking the advice that's necessary, and making sure that if you haven't had something in the first 14 days, you are factoring in some kind of a change. In the market's told you that it's not basically happy with the price for your condition or for your location. So get into it and start looking at making that change. Otherwise, you're going to get left behind. Great. Let's get into some key markets. That's what we want to look at now. Right. Top market for the month of May was East Hants, Colchester West, Elmsdale, Enfield, Lance, that whole area up there. They are sitting at a $479,000 average price point. They have 37 days on market, 51 sold, 108 houses for sale there, so 2.1 months. And they were selling for just under asking price at 1.7% lower than asking. So they listed at 487, they sold at 479. That's basically a $8,000 price reduction. Now keep that in mind, because I've said that obviously we are 1.2% sale to list price over, yet the top market is under. Well, let's go to market number two. Number two was Bedford. They are sitting at $799,000 average sale price. They have got 48 days on market, 44 homes sold, 65 active, so 1.5 months. Not a lot of new construction in that number for some reason this time. And also the interesting thing is they're listed for $806,500. So they are also sitting at just under asking price at 1.1% under asking. So that's housing market number two and housing market number one, both under asking price. Now, when we look at the top markets, we do that on the number of sales. So these are definitely the top three markets that are making up something like, what would that be? 130, making up roughly a quarter to 30% of all of the sales. Now let's look at market number three. That is Timberley, Prospect, St. Margaret's Bay, Tantallon, Upper Tantallon area. So they have an average sale price there of $669,000. And they are minus 0.4%, so just under asking price again. 671.5 was the list price there. 32 days on market, so a little bit longer, but like they've been a lot higher than that, so they're doing well to bring that down. 42 homes sold, 104 active, gives them 2.5 months of inventory, but there is a good amount of new construction in that number as well that's actually keeping the days on market pretty high. So when you look at that, top three markets all underneath asking price, that must mean there are a good amount of houses that went for over asking price that are not in the top markets, but have enough over asking price that they actually brought the average up to 1.2% over asking. Did a bit of more of analysis then to figure out why we are so much over asking price. Well, not so much, 1.2%. It's not so much, but it's over asking price by like $7,500. And there are quite a few markets there, especially Dartmouth. Dartmouth, the average over asking price there, and there's quite a few sub-districts that we call Dartmouth. So like you're looking at Dartmouth, Woodside, Eastern Passage, Southdale, Creighton Park, Montebello, Forest Hills, Colby Village, Portland Estates, like, you know, there's a lot of areas. The average of those guys being over asking price was $24,000 over asking price in all those areas. So pretty hot. Basically, the whole of Dartmouth area is a pretty hot area to actually be listing houses and trying to be a buyer. Just expect that it's going to be a little bit tough in that area, that's for sure. And then also Sackville came in probably at number 4 on the number of sales list, but they were $18,000 over asking price. Then also, you start bringing in some of the South End properties. South End, the average sale price there was $1.35 million. But the average under asking price there was $58,000. Now, they didn't sell a ton of houses. They only sold 12 houses there. But they have a massive impact on the overall sale price. And there was also a couple of big properties in the Fall River area, over $1 million that sold. One in Bedford in particular that sold at over $2 million. So when you look at some of those numbers and you kind of put them all together, that definitely shows why we're kind of lifting over the asking price in general, just not in the top 3 markets. We also wanted to have a quick look at how many over asking price went, and there was 234 of the 490 that sold that were over asking price, and roughly 230 that were under asking price. So that again gives you some idea as to, well, how's that over and under asking price looking? It's just the ones that were over asking price were quite clearly more than over asking price compared to some of the ones that were under. Now, the highest over asking price, just from an information point of view, $311,000 over asking price for a property that was actually down just off Armdale, backing onto Chocolate Lake. You kind of look at it sometimes and go, I wonder if there was a little bit of emotion going on there, or whether it was just kind of pricing strategy by the listing realtor to actually generate that. But that was listed at $989 and sold for $1.3 million. So that was obviously a big number over asking price. Not a huge house, like it was a 2,200 square foot 3-bedroom house, but it was pretty immaculate inside and it looked really good. Now let's go to the opposite end of the extreme. $250,000 under asking price, but it was a $1.5 million house, $1.4 million house in the South End, been sitting on the market for an awful long time, so hence is always going to have a big chunk of money off the price. So that gives you a really clear idea of exactly how the market is doing. Now, if you have any further questions or you want to get into more detail, you want to really understand like how best to protect your buying position or your sale position, definitely get in touch and we would love to sit down, have that conversation with you, educate you about the process, tell you how we do everything to make sure that our clients get, number one, the best money possible for the listing, but also the best price when we're buying. Then details are all down below. Let's get in touch and have a conversation.